G'day investors, welcome back to Pete's Investing. It's March 15, 2024. This is the Bitcoin price analysis. Now we're still in a pretty strong bullish trend, although there is a major retrace, potentially a major retrace on the way. So let's see what that may mean. So on the weekly chart, first off, we've got the ADX at the bottom here. It's still very strongly bullish. On the daily, it's bullish, but on the hourly, it's broken down into a bearish momentum. Also on the CCI 150, which is our trend indicator, but also our divergence indicator, that's very strong bullish as well. On the daily though, it's broken down through the moving average band. Now again, we only take long trades when the weekly and the daily are aligned. In this case, you would avoid taking long trades because it's actually broken to the downside. On the hourly as well, we did have a bearish divergence here versus higher highs on the price. In fact, if you extend that, and I will extend it, just from that point, yeah, it's not working today, there you go, to that high there, that'll be similar to where that is on the price there. Bringing that up there, that's still a bearish divergence, so it still may fall off. Now what that looks like, if I blow this up on the, actually I'll draw it on the daily, that's down to that level there. So in terms of a retrace between that Fibonacci low to that high, you can see there we've got a target area between the 23 and the 38% level. That shouldn't have drawn, just down there. That's our target area. So that'll be the 20, it's an initial target area, so we expect it to hit that area. Of course, if it goes any further, and below that 61%, that's going to be a very critical point in terms of potential further declines. But at the moment, let's take one step at a time. If it hits this area, it could actually bounce from there and go higher, or again, it could go lower. Now, if I show you a couple of things here, let me go zoom into the weekly first off, just to see where the major trends are coming from. Again, we had a couple of bearish divergence back here. The first one fell off, and then the second one fell off as well. So we always pay attention to these divergence, and currently there's no divergence on the daily chart. But if I was to draw some support lines, you can see there some it's currently hitting this current previous minor support up there. So that's an area you've got to be mindful of. And again, let's see how far down it comes before we talk about this lower level down here. On the daily, let me play that one up. So again, let me just remove that Fibonacci to clean it up. So if we draw those support lines again, okay, you can see there it's actually bouncing off that support line as we speak, and that was hit a couple of times there. And if I draw some diagonal lines, you can see there it's resting on that diagonal as well. So that's a key area. So again, it may bounce from there, who knows, but that's, in terms of divergence rules, it may hit the initial target area. That's our presumption at the moment. And if we go to the hourly chart and blow that one up as well, you can see there we've got the bearish divergence in play, and we've got a few diagonal lines there. It's actually broken to the downside through that main one down there. So it's actually very weak signal at the moment. On the hourly chart, notice there was a smaller divergence which was in play. It's a bit hard to read that one there. There was a small bearish divergence there, and that actually broke to the downside and hit our target before bouncing up again. That's what I mean. It doesn't always crash through. Could just be a touch and before it bounces away from it again. So again, just be careful. Avoid taking long or short trades until we see the weekly and a daily alignment in terms of going short or going long. At the moment, they're showing mixed signals. In terms of a trading idea, what I've got here is the daily chart and two 1 hour charts. The green chart shows the average down approach, and the pink chart shows the stop loss approach. And stay to the end of the video to watch, to view the rules. I've got a couple of slides there, just very quick slides. So basically what we're looking at here is when the CCI and the weekly and daily are aligned to the upside. In this case, the daily was in the upside there. You would have taken this long trade. and that would have been, you can see there on the, if I put the cursor there, that's where it started on the daily. That's where you would have started trading long, and you would have stopped trading long when the CCI on the daily breaks into that moving average band. And that you can see there on the green chart, the average down approach generated 9,261, and on the stop loss approach it generated 2,741. Now you'll notice there on the daily it's broken to the downside. Now remember, the weekly is still showing bullish movement, so you would not be taking short trades. But if you're got the risk appetite, and I'm not suggesting you do this, it's just an idea of how you should probably potentially look at it. You could actually just trade on the daily alone. So in this case, when the daily breaks to the downside, the top here on the red, I've got the trading strategy for the stop loss approach. So that would have generated 1,002, and the stop loss approach generated $38. So stay tuned to the very end of the video. This is the first slide. I've got two slides. The first slide is the average down rules. So you can pause the video and read that in your own leisure. And the second slide shows the stop loss rules. Again, pause the video at your own leisure. Thanks for watching. Hit that like and subscribe button. Hit that notification bell, and we'll see you in a future video.